Hello, everybody, and happy Friday. Looking forward to a big Super Bowl weekend here, Jason Pers. All right, hot take here to start the show. Why is there not a federal holiday for the Super Bowl? It seems like some of these federal holidays we have are pretty ridiculous, and all of America celebrates Super Bowl Sunday, and they drink too much, and they do stupid things. Seems like Monday should be off for a federal holiday. Why is that not a thing, Jason?
Sam, I have no idea. I think you should definitely make this your cause for the next year.
I'll give
Make
my
this
local
happen.
representative a call.
Make this happen. Uh, Government's usually very quick to change and make things better at all times, so they will probably do that very soon.
Totally, yeah. They have a great reputation. We have a lot to discuss today, Jason. It's been a minute since we've done this show here on Stock Market TV. And a lot has changed, man. A lot has changed, especially in precious metals. We're seeing humongous rotation into energy and some of the ag stocks. And we have the last chart of the day, I think, is going to bring a smile to everybody's face. So stay tuned for the last slide of today's show. But without further ado, Jason Pers, let's just get right into it, starting top down macro. And man, you more than anybody I know has been pounding the table bearish US dollars. I've been open-minded to a potential scoop and score here. I don't really have a strong opinion on the dollar. But as time goes by, it seems like you are going to be proven right, my friend, that the dollar is going to break down from here and head towards that $90 level you've been talking about for a very, very long time.
Yeah, I think, when we look at this, you got to always think of the primary trend. It's the reason why I stick to the long-term models I do is because short term, it's very hard to really get trades correct a lot of the time. It's very hard to predict where the market's going to go. Not that I'm exactly predicting, I'm just following the trend. And in the longer term time frames, you're kind of looking at the primary trend and able to really identify this. And the dollar, even though I trade currencies, but I don't usually trade the dollar itself. The dollar is just this massive input to everything we trade. If we're in commodities, we're in stocks, whatever it is, the dollar is obviously one of the biggest inputs, if not the biggest input. So looking at this and understanding the primary downtrend is happening and still really maintaining is very important. This looked like a bear flag setup, if I was to guess anything without it breaking down. Now it finally broke down. Once again, we're seeing this little bounce here after the Fed day. Is this something that's sustainable? I don't think so, but I do see that the curve kind of rolled a little bit, which usually gives a little boost to the dollar. But I'm assuming that's going to change pretty soon. So I would assume now, here and now, we're going to see the dollar continue to move lower, at least for the rest of Q1. It's something to keep an eye on, though. If it really gets above those levels, we've talked about 100, 101's mine personally. If we get above 101 and sustain up there, then there's something to really talk about. Until that happens, I'm still betting on more downside in the dollar.
Totally. And I like to use things like the 14-day RSI to identify the momentum regimes that we're in. We go through bullish and bearish momentum regimes. In bearish momentum regimes, you consistently get oversold readings and you do not get overbought readings. And that's exactly the case right now in the United States dollar. Back on, let's see, I have the chart right here in front of me. On January 27th, the 14-day RSI reached about 22, so well below that 30 threshold for an oversold reading. So, I think you will get a fresh leg lower here. This is just a little counter trend move. And yeah, kudos to you, Jason. Sticking to your guns. Mad respect for you, bro. You also brought this chart of the 30-year Treasury yield, which, continues to look like it wants to go higher. And I think, I have a hard time looking at this in isolation. I think it's really important to zoom out and look at global yields as well, because the bond market is a monster, Jason, and it does not operate in a vacuum. The German yields trade with the US yields and they trade with Japan and all of, they are all connected. It's pretty much one trade. Of course you're going to have some one-off countries that, they're doing their own weird thing, but you know, uh, bigger picture, all of these countries' bond markets trade together. And we're seeing new highs pretty much across the board for these 30-year yields around the world. It's just the US has not broken out. So I think it's really, really difficult to make the case that the US 30-year yield is not going to break out.
No, I agree, Sam. I think where we're at here is one, it's the same thing with the dollar. It's like but a little bit different. So I've been a bond bull since 20, or sorry, a bond bear. Yields makes everything flipped around. Sorry. Bond bear, if you're looking at TLT, the breakdown happened all the way back in 2020. So when that breakdown happened, I was short bonds. And at the time, shorting bonds was looked at like the craziest thing anybody could do as a trader. I actually lost investors. I lost random people that I talked to about markets. It was wild because I just said, hey, bonds are probably going lower here. Inflation is starting to take off. It would just didn't happen for so long that nobody believed it would happen. Then we entered this bond bear market that we're still in today. And if you go back to the last chart, Sam, we're seeing, that consolidation right near those highs. So I'm still short the bond market. I'm still short long bonds at the moment. I am long like the 3-month bonds, which are attached to the Fed rate, but I think that's going to end pretty soon. And I'm still short the long bonds. So I still think yields are probably headed higher. And I think that's the surprise trade for everybody. Even though like there's some people like me, yes, it's very few and far between, even though people keep telling me there's a lot more. I haven't met many bond bears like myself. I still think that this is going to be one of those trades that really takes off and energy will probably go with it. So keep an eye on this. If this starts to get above 5, I think that's a scenario where we see energy to start to rip the face off this entire market. And I don't think it's
I
going
don't
to.
know if you've seen, Jason, that's already been happening, bro.
It started. This is nothing, Sam. In my opinion, this is nothing. This is just the beginning. It looks
I
like
think XLE was up 17% in the month of January.
not enough. I think we're looking at a 50% year, a 100%
Yeah.
year, especially in some of these like smaller sectors inside the subsectors inside of energy. I think we're looking at something similar to what we saw in the gold miners last year in energy. So I think like this big move that started is nice, and big moves lead to big moves. So it's a good starting point, but I think this is going to get really crazy. I think if yields start to break to the upside, we're going to see money just rotate out of everything and into energy.
Totally. Yeah. We've been pounding the table here at All Star Charts Gold Rush, pointing out, I think in back-to-back weeks, we've pointed out energy and highlighted some of our favorite stocks in the commodities weekly column. But shifting gears a little bit here, Jason, let's talk about precious metals. Gold relative to the S&P 500 is still holding its breakout to new multi-decade highs, entering a brand new primary uptrend. And we've talked about this multiple times on this show of how these cycles don't last a few quarters or a few years. They tend to last a decade.
Yes, and I think this could be very significant timing because, like, let's say, I mean, people don't remember this one, but let's go back to 2008. We go back to 2008. What does the gold compared to the S&P 500 look like? Looks like it's in an uptrend, a little bit of consolidation here and there. Um, but it's still in an uptrend. So what were stocks doing in 2008? Well, everybody remembers that they were going down. Gold is also going down, but it's holding up much better than the rest of the market. Basically, any asset class you could throw at it, gold was still holding up better. So I think this is a sustainable uptrend, but I also don't know what that means for the S&P 500 currently. Currently, I'm not bearish. I'll give you some reasons in a second why I'm not bearish on stocks in general at the moment. But I do think this is kind of saying, hey, there's still more of a rotation to go, maybe more energy, maybe more base metals, and so on. I think that trade's continuing to take off and look good.
Totally. And one of the most important charts, I think, in precious metals is the silver relative to gold ratio. In true precious metal bull markets, you see silver outperform gold. Period. End of story. You do not have a healthy precious metal bull market without that happening. And, for months now, this ratio has been absolutely ripping to the upside. And that changed in a very, very big way not long ago when it peaked and rolled over and came back to this key level of interest. Jason, back in my technical analysis kindergarten, I learned about the principle of polarity. This former support turns into resistance, and then that resistance, once broken, becomes support. And that's exactly what we're seeing right now. Former resistance becoming support. And it's just, we need to monitor this ratio and make sure that level holds because, if we get back below this line, that would be one nasty failed breakout, and from failed moves come fast moves in the opposite direction, and we could see this just completely fall apart and get back in this range, and that would be really, really bad for the precious metals trade, and that would signal to me that this would need much more time to consolidate. Bigger picture, zooming out, we just looked at this long-term chart of gold relative to the S&P 500. Long term it looks fantastic. But we are in a corrective wave right now, and it's to be determined how long that will last. And I think this level holding is very good and suggests that it won't last nearly as long as maybe some people are expecting. I think another level to watch here is $73 in the silver futures. We've been holding that level as support. And I think that's really important to continue to hold. And if we fail to hold 73, I think silver futures could go back to 50 really fast. And, we show the 2011 peak here in silver. But remember, this chart goes back to 1980 during the Hunt Brothers silver squeeze. Man, I wish I was trading back then, Jason. That would have been so much fun. 1980. What a time to be alive. But anyways, I think silver would definitely hold $50. I think I would, back up the truck at $50. But man, I don't want to see that. I want to see it hold 73 and consolidate here and work its way back towards 111. I think that is the much more bullish outcome here.
Yeah, I think that, when we're looking at silver, we updated you guys a couple weeks. We even put it on Gold Rush Live. I talked about silver and the target we hit, and then talked about how I'm possibly trading in the trend model and so on. So, we got you guys pretty good levels there. And now we're kind of looking at the 73 level for a level of interest. Now, once again, this is falling very quickly. I wouldn't want to just jump in. I would take a little bit of time. I know a lot of people will buy things on support. A lot of people are doing it with Bitcoin. A lot of people are doing it with silver.
I like to buy strength after the dip.
Yes, that's what I'm saying too. And that's what Sam would also suggest is something very simple. This is a simple way to do it. So you can put in, if you are running very tight stops, here's a way to do it that is safe to do if you are trying to mean revert buy things. I don't like this for commodities, but you can do it. So if you're looking at the 73 level and you say, okay, and it bounces here, let's say, it's going to get up a bit. I would have a 10-day EMA. My 10-day EMA, once it's over that, then I buy it. So this is a back-tested strategy that actually does work. So you buy it over the 10-day EMA. It gives you a little bit of space to put a stop loss below it. So when you're putting a stop loss at those lows around 73, let's say, I think it hit 72 overnight, something like that. You put a stop loss there. Most of the time, the EMA, I would say, is probably going to trigger, let's say, 77 to 80, somewhere around there if we really kind of sustain, chop around for a bit, and then move higher. And so you have some space to put that stop loss. So you're not just trying to jump in here and go, okay, at 73, I'm going to buy this thing. And if it dips below 73, I'm out. Like most of the time, that's never going to happen. It's the same people who said, well, if you're in silver futures, you have to run a very tight trailing stop as it's moving up, which is bullshit. That doesn't work at all. If you're trading something like silver that has intraday moves at 10% up and down, you run a tight trailing stop, you've just gotten stopped off out every step of the way in this uptrend. So tight stops are a bad idea. So I'd rather wait for some momentum here. And that also gives it a chance to prove itself because it's not just about us having ideas. It's about, is the market proving us right? It's the reason why we highlight these levels and say, if we're above here, it's going to go here because That's the market proving us right. We get over 50, we could hit 100. That's the market showing us that it's doing what it's doing. We don't just buy it at, 20 and say, okay, it's going to go to 100. So I think that's the way to look at things if you're doing it, and that's a way I would trade it if I was you guys.
We have Jay Hampton in the chat, Jason.
Mm-hmm.
Says they bought ETH last night and jumping into silver today.
Have fun.
Man, you're more brave than me. Um, that is catching
And
a
it
falling
doesn't
knife,
use
is what
use
they call that.
stops. Yep. I mean, once again, this is everybody trade the way you do it. I haven't met a commodities trader that's still alive to this day who doesn't use stops. That's all I know. And who trades big and who buys dips. Commodities. So here's something, and this will be totally disagreed with me, I'm sure, but maybe over time this will make sense. So if you backtest buying dips in commodities, now you could be right. Maybe silver, this is a good level. Sam has highlighted these levels really well. Maybe it bounces here. But let's say we get into silver. We buy it. Oh, sorry. Let me actually do this total commodities market. I've done this with silver. I've done this with oil, everything. So if you buy the S&P 500 after 4 days down, you make money. I think it's like 82% of the time on a short-term trade. If you do the same thing, buying oil, silver, copper, whatever it is, after 4 days down, it actually is usually the beginning of a new trend, and you're right about 20% of the time, and your count blows up most of the time. So this is why I'm always saying it's always important to wait for that little bit of momentum. Like, what are we doing here? Are we trying for an extra like 2%, an extra 3%? I'm looking for big moves. So I don't really give a shit about 2% or 3%. I'm looking for 50. So give it space, give it time, but it's a free country. If you want to buy dips, go ahead. Falling knives get you cut though.
Well said, Jason. You brought along some charts to talk about the stock market, which is not something we usually do here, Jason. But there's a lot happening in the stock market right now. One of them's the Bitcoin getting back to a key level of polarity. You have tech here. What do you
Mm-hmm.
think about tech? Are you short tech or no?
Currently, the signal isn't there for me to do it yet. So once again, I'm not saying that I think this is the end of technology or the end of the world or something. Like I don't. My main point in pointing to these two is just showing a significant rotation.
Mm.
Um, I don't know where Bitcoin ends up. I don't know where technology ends up. But at the same time, like I trade everything. So you guys who know me, like I run a macro fund. All these are products in my portfolio that I actually do trade. So looking at this, like I'm looking at possible breakdown here, also lower high that started last year. This
It's
looks
a
like more of
changing
a
character,
rotation.
Jason. Tech's
Yes,
been a leader for a very long time.
it's a change in character. And if we go to the next chart, what is actually holding up that's got me kind of fired up about it? So if I'm looking at regional banks here and I'm going, man, the market looks like it's in bad shape. Everybody's going where it's a bear market. We're all going to die. It's the end of the world. And to me, I'm looking at the KRE and saying, oh, the KRE is in a strong uptrend here. So the KRE being in such a strong uptrend is always going to point me to the fact that the market is in good condition somehow. Now, if this turns over, this is one of those things. Sometimes in a bear market, what happens is you'll have a couple things that are kind of giving you a signal. And let's say go back to COVID. KRE was one of the first ones to fall over. Oil fell over, and so on. And then you basically had technology kind of holding up. As that rolled over, the whole market rolled over right with it. So I would watch this for a signal, but to me, this is kind of saying there's more upside to go in the market. The next chart is transport. So if we're looking at transports, we're also seeing the same type of signal, which is let's go back to old school Dow theory. I still love it. I still think it makes a lot of sense. I still think everybody should learn how to use Dow theory. The transports are making new highs and are shrugging off this pullback altogether, which is kind of telling me there's something going on here that's a little bit different than what everybody's seeing. The Dow is actually consolidating near the highs, possibly getting near those today. I'm not sure. I'm not looking at a chart of the Dow currently. But if we're looking at that, it's also
Dow Jones Industrial Average, new all-time highs today, Jason.
there we go. So Dow is making new highs, transfer's making new highs. I'm not really worried about this market currently. I just think it's more of a rotation. We're rotating into different assets, into different areas. And so as we're rotating into these different areas, like what we saw last year, we're rotating in gold miners, metals and mining, lithium stocks, uranium, so on. This year, we're kind of doing something similar where we saw uranium and a couple of these things moving, but now we're seeing energy moving. I just think that shift's going to continue and we're going to continue to rotate. And the next chart is showing you the NASDAQ against small caps. So small caps started to outperform again. That's an area that I still think looks really good, especially look at energy as the leading small cap sector currently this year as well. Materials are holding up really well in small caps. Industrials are holding up really well in small caps. So I think this is just an area where we're going to continue to see this rotation into more commodity-based sectors. The regional banks, why I brought that up in the transports, they tend to make big moves during those types of environment where the commodities are actually leading the way. So I think that's just going to continue. I would just keep an eye out. And the small caps, I think, are an area where you can make a lot of money, whether you're looking at technology or whatnot. There's a lot of money to be made in the small cap space.
Totally. Go rip through some of the biggest biotech winners over the past
Yes,
12 months.
there you go.
Humongous moves. I mean, these biotechs have been out of control in the small caps. You know, we were talking about the Dow Jones Industrial Average making new all-time highs, Jason, but man, commodities relative to stocks, and I use stocks as the Dow Jones Industrial Average in this ratio. I have to say, Jason, commodities look very favorable relative to stocks. You know, you haven't stuck this breakout quite yet, but man, I think it could happen any day now. Just one big stick, and this ratio is in a brand new primary uptrend. And, you know, in absolute terms, we've already seen commodities working very well. Here's the VanEck Natural Resources ETF, up 10 consecutive months, which is a new all-time high. That's never in history happened before, as the price is ripping to new all-time highs. And you're seeing a humongous breakout in energy. We've been waiting since, what, 2008 for this breakout, Jason? The only S&P 500 sector spider that was stuck below that great financial crisis peak. That is no longer the case. And you said earlier today, Jason, energy could be up 50% in 2026.
Yes, and the big thing I want to say for confirmation of this. So right now I'm long some energy stocks. Sam and I have been highlighting a lot of these. But the one thing I want to see is some more confirmation. Already long it, not saying anything against it, but I am saying like I would love to see TLT break down. Now there's some stuff going on with the market. So if we're looking at bonds, they're not being issued to the same degree in the long end of the curve, the 20 plus years and the 30-year bonds. So we're not seeing those issued to the same degree. So we're seeing a lot of low volatility there. But usually that type of manipulation, not saying it's like manipulation like you can't trade it, just that type of market manipulation or currency manipulation will end up in a lot of low volatility, but that usually leads to very high volatility. So I think if we get a breakdown here, that move's going to be very big downwards in TLT and very large upwards in XLE. So something to just keep an eye on here going forward.
Totally, great point, Jason. I think a big move is coming in the bond market. It's just that I have no idea when it's coming. You know, I felt like it's time for a while now, but it continues to do nothing. So I'm
working
really
hard on
curious
it.
what that catalyst will be, or if there will be a catalyst.
I bet there's none. That's the thing. I bet it's very similar to gold. Some of the best trades that happen are always when, like in 2020, when the bonds broke down, there was no catalyst. Nobody could point to anything. Same with gold. It breaks out in end of 23 into 24. Basically, you're looking at no catalyst. There's nothing that you could point to say why gold would break out. I'm sure people could make up stuff in hindsight. At the time, nobody knew. Now today we're looking, you could point to central banks buying or whatever. They've been buying it for a long time. That wasn't exactly just it. So now we're looking at this. I think there'll be no catalyst when we see yields get over 5% and start to sustain. And that'll be a good sign. That's what you want to see. You don't want to see news for it.
As a bond bear. That's what
As a bond bear, I don't want to see news for it.
Totally. We have Jay Hampton in the chat asking if we can pinpoint what in energy we are looking at. So the past 2 Fridays, we've mentioned that we've written about energy in our commodities weekly columns. We've highlighted some of our favorite stocks there, but today we have some of our favorite more high level charts. We're not going to get into the individual trades in this show, but oil services I think are a really, really interesting place to look right now inside of energy. These are some of the more risk on stocks inside of energy, and these are the ones that tend to do the best during strong energy bull markets. And a few weeks ago, Jason Pers and I had the one and only Josh Young on the show. And if you missed that episode of Gold Rush here on Stock Market TV, I highly recommend you go and check it out because Josh really knows his stuff when it comes to energy. And right now, as we've been talking about, energy's breaking out. You want to know what to be in. And Josh has some great fundamental takes. We have our technical takes here, like here, oil services ripping to new 52-week highs versus the S&P 500. This is clear leadership inside of energy. I think the energy bellwethers are also a great place to be. I mean, ExxonMobil keeps on ripping to new all-time highs. You can look at all the bellwethers in energy. I think those will be great places to be, whether it's CCJ and uranium, ARLP and coal, First Solar in the solar space. All these bellwethers I think are going to do very well. They have liquid options if that's your kind of style. I like these a lot. Looking at the exploration and production, these are, again, some of the more offensive risk-on stocks inside of energy, much like these oil services names. And you're seeing new 52-week highs for the XOP. This one's got to be in the fund, right, Jason?
Yes, sir.
Nice.
But
Okay.
we also like have so many for the service. We have so many names that are kind of inside of this that we're really not even recommending it because that's a thing. If you really want the alpha in this one, you're really going to want to go outside of that. For the fund, we're not trying to have as crazy volatility as having 1,000 different stocks in there. But if you guys are trading, definitely look at some of these individual names inside of this ETF. There's some great ones, and there's some ones
Totally.
that look a lot stronger than even this.
Yeah, SM Traz says that Gold Rush membership is a must. So many great trade ideas. Very true. We've highlighted some great exploration stocks in the energy space and looking finally at more of the ag space, Jason. I
I
think the
like
ag
this.
space is really interesting. So here's the Gold Rush Food Processing and Distribution Index. You can see this is an equal weight basket of about a dozen stocks, and it's ripping to new all-time highs, Jason. These aren't like stocks that are going to double in a year, but these are stocks that are going up and making new all-time highs. They are in a strong primary uptrend, and I think just inside of the agribusiness space, there's a ton of huge winners. You had Trip Davidson in the chat earlier saying shout out to the DE call, crushing it at that 507 entry. DE is part of this agribusiness trade. If you go in and look at the components of Moo, you'll find a lot of great charts there, some of which are included in this previous chart we were looking at. But yeah, I think this is really interesting right now. And I promised at the top of today's show that I'd bring a chart that would bring a smile to your face. Looking at milk futures. I mean, how many of you have looked at milk futures recently? I bet 0.0% of our viewers,
Sam
Jason.
actually brought this to me, and I had no idea either.
It's not liquid enough for Jason to trade. And for those of you that aren't familiar with Jason, he trades just about everything. He gets freaky
I get freaky
deaky
out
with
there.
it. Yeah, you're trading on how many exchanges, Jason?
11 now? I think 11.
11 exchanges.
11 now. Yeah, yeah. 11 now? Yeah.
You are a freak, my friend.
That's how you
That
got to
is
do it.
aggressive.
But I also respect this chart, guys. For you guys that don't know, there's two ways to look at the Kardashian bottom. You could also think about it from the upside, which is also another thing. And maybe you put your face in there and maybe you get a milk mustache from it, is what
Oh
Sam's
my
really trying to
God.
highlight here. So
Oh,
good
should
job,
not have brought
Sam.
this chart.
Great chart. I didn't say anything. I didn't even use the T word or the B word. I
Wow.
didn't even swear this time. So, we're doing good.
Unbelievable. You're going to get us canceled, Jason.
Yeah, I can't help it.
Hilarious. All right. Beautiful breakout here in milk futures. Absolutely going vertical. I think it has a date with these 2022 highs. Still more upside to go in the milk futures. And if you guys like what we had to say today, you should click the link in the YouTube description and leave us a like and subscribe to the Stock Market TV channel so we can continue bringing you more great content like this and support our work at All Star Charts Gold Rush. You know, we are spending a lot of time looking for the best opportunities in, you know, whether it's bonds, currencies, commodities, all of it. You know, precious metals, we've absolutely crushed it over the past few years, and now we're rotating very aggressively into energy and really pounding the table on the best energy setups. And you know, I have a very funny feeling, Jason, that energy is the new precious metal trade. You know, some of these precious metal stocks have gone 5x over the past 16 months. I think we could very well see that be the scenario in energy here in
No, I agree.
2026 into 2027. So
I agree. We're going to probably be highlighting the crap out of these, the ag stocks, and so on. And that's where the next, 2 to 10x winners are probably going to come from.
totally, yeah. Well, this was an awesome show, Jason. Thank you for doing this with me. I always have a good time talking with you, and I appreciate everybody being here. Jay Hampton in the chat today, Wavy McFly, SM Traz, the Cement Grays, Trip Davidson, one of our favorites we met in Miami. That was really special. And we got who else? Builder 1995. All right. What's up, Builder
Lively
1995?
chat today. Very lively.
Yeah, this was
Appreciate it.
awesome. Thank you everybody for being here very, very much. We appreciate it, and we will catch you again next week for another episode of Gold Rush here on Stock Market TV. Until then, try to stay safe this weekend and enjoy the Super Bowl. Don't do anything stupid.
Later, guys.
Later.